Let's see what they are long or short of with the trading positions. 65% long, 35% short. This is an amalgamation of everyone, so retail, institutional banks, etc. So smart, dumb, and people in the middle as well. I'm not saying which one is which. So there we are. So basically long of the euro and the pound, 50-50 on the yen, a bit short of the dollar Swiss, very short of dollar Canadian, which I suppose we're just below 129, we're about below 130 at the moment. So that's fallen like a stone recently, hasn't it?
Yes, and that one really needs a delivery move. Next week, the Bank of Canada has its rate meeting. Basically, as long as the Labour data today are reasonably firm, everyone's expecting a 25 basis point rate hike from the Bank of Canada. If they weren't to deliver, that could reverse very, very sharply. I'm not sure that actually, even if they do deliver, it may not be a case of buy the rumour and sell the fact.
The 130 looks like the ceiling at the moment, which is
it should be
amazing.
It should be, unless they don't hike rates.
Okay, and then 50-50 on the Aussie. That seems to be sort of marooned around the 76 level, 75, yeah, 75. Well, 76 exactly at the moment. Been down to 75, 75, but a mini range. I mean, it's amazing that it's quite so dull.
Yes, and I think that's probably because people at the moment are looking at other pairs, particularly things like euro-yen, which has been choppy, dollar Canadian, and so it's able to sort of go off into stage left and have a quiet period. But for the time, I think the moment you start to see some more interesting numbers coming out of Australia, perhaps you'll get a bit more of a revival and more of a desire to actually seek some positions. The real problematic for the Aussie dollar is basically you're getting to the point where they're almost at rate parity with the US.
Right. Okay.
So the carry isn't that attractive.
Yeah. Okay, and then finally, long of euro sterling, which is the opposite to the retail people on their own. And that's up at 88.36. So I think it's almost bearing out the idea that the eurozone is on fire.
Well, it certainly seems to be. Yes. Yeah.
So political stability and economic growth.
Yes, not the instability that everyone was predicting, and not the weak growth that everyone was predicting. The thing which is obviously missing from the equation is that the inflation numbers still aren't really anything which cracks up or puts any pressure on the ECB to start tapering more rapidly, or even start to consider when it might need to hike rates.
And over here, just a mess of uncertainty, bad trade figures, bad this, bad that.
Yes, and I think the real risk is after the bad numbers that we had this morning, we get the labour data next week, average hourly earnings, absolutely critical. If that doesn't really show any sign of a pickup from the 2.1 that we had last time, which is very low, and the week after we have the inflation numbers, and if that stays below 3, then this idea that the Bank of England may be having a robust discussion about hiking rates, but probably won't deliver in August, is probably going to turn out to be the truth, in which case the downside for sterling, both against the euro and the dollar, is quite big.
I mean, so do you think the market's just not factoring that in at all?
Well,
believe the bait of we could be starting to raise interest rates.
Well, yes, exactly. They're taking forward guidance literally. This may be one of those occasions where they do need to be reminded that Mr. Carney is their unreliable boyfriend.
Yeah, and also if people actually listen to what he said, he was basically saying, I'm only going to raise rates when hell freezes over. So there's no Brexit uncertainty, there's more investment into the economy, people get double their wages, blah, 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 which is not going to happen at all.
Yes, exactly. I mean, I think the thing here is they can have a very robust discussion about it to show that they're doing their job. That is their job, to have a discussion. But that doesn't necessarily mean they're going to deliver. And if you actually look at the history of the Bank of England over the past 5 to 6 years, they've quite often had occasions where they've said, I think we may be on the cusp of a turn in trend, and at the end of the day you get a couple of people voting for a hike, and then they all move back to the sidelines and policy is held unchanged.